And I want to thank you guys for coming in today. We're going to talk about probably one of the most important things when it comes to life insurance, and that is health issues and underwriting. Underwriting is probably the hardest thing to have a conversation around because a lot of times people just don't understand that your ailments, your issues, or whatever is going on in your body can impact your pricing. And so when we think about this and we think about the concerns and strategies in having a conversation, our goal today is to really understand underwriting in the life insurance process. We want to learn strategies for handling health issues in high risk clients, and then ultimately review some carrier specific underwriting guidelines and case studies. Okay, so that's the objective for today. Let's kind of dive in and take a look at what we got here. Once again, feel free if anybody has any questions, do the little raise handy thing or put your questions in the chat, and I'll be glad to address those as well. So I want you to picture, if you will, uh, an artist, okay? Picasso, Da Vinci, whatever you want to picture. That is what I would say underwriting is. Underwriting is an art and not a science, because if it was a science, every single carrier would have the exact same pricing and there would be no competitive advantage for certain things. So when you see how underwriting is set up, it's like an artist. And the artist is going to look at you. They're going to basically take raw data and paint a picture of you. And based on whatever carriers you have in your toolbox, you can then pick which carrier has the best self portrait of you to put on top of your mantle. That's the best way that I could think of, explaining how underwriting works, because basically underwriters determine, the policy approval with pricing and coverage. They evaluate all your health and lifestyle risks, financial factors, and helps the insurers assess risk and prevent adverse selection. So the underwriter is kind of like the goalie for the insurance company. And a lot of people like to call them the sales prevention unit, but really their objective is to assess the risks appropriately so they can maintain pricing for the carrier. A lot of carriers will have two different ways that they go about doing business. The first way is they might have really good pricing, but really strict underwriting. Or the other way around, they might be very liberal with underwriting, but their pricing is going to be higher than some of the other carriers, depending on the risk. So that's what we always have to assess and evaluate. That's why being in this open, independent market allows us the ability to assess risk with several options. So, for example's sake, someone dealing with a high issue, a high risk client, some of the major ones that we see today: diabetes, you have heart risk, cancer history, all of these things. We actually have sheets that you can give your client to fill out so we can do a pre existing questionnaire to figure out how we can assess the risk or the opportunity for the client. I would hate for someone to put preferred best on an application and show pricing for a preferred best when the client has, an 8.0 A1C, had a heart attack 2 years ago, maybe some melanoma, things like that, because that's probably going to be a decline. And a lot of people will say, and again, this is coming from 15 years in the home office with two different major carriers, every application that comes in costs money. So as you say, oh, well, screw it, let's just submit the application anyway, you're basically costing the carrier money. Why does that matter? A couple reasons. If you submit too much bad business, they could cancel your contract. Two, they also, again, it impacts their future pricing. So if you really favor that carrier, but you keep sending them bad business, then it could impact the pricing for that product too. So just kind of keep that in mind as you're dealing with these higher risk health clients. Some strategies to present clients favorably. This would be some things that I would say setting the expectations for the client. first and foremost, the one thing that I always say to people is you want to set the appropriate expectation for the insurance industry. Why? Because if you set an expectation here, I'll put it here, and the client gets up here with what's actually taking place, so expectation and reality, everything in between is frustration. And so we want to mitigate that and keep it, line item and smaller so there's less frustration. So if I said, Mr. and Mrs. Client, just to let you know, when we go through this process, it'll take about 6 to 8 weeks. There is a possibility for non-med, depending on the client, depending on the carrier, but there is a possibility for non-med, but I want to just set the expectation that this normally takes about 6 to 8 weeks. You could potentially have to do blood and urine and, answer some questions, like some fun questions like, have you ever taken heroin? Yes, that is on the application. So all those things matter. And when you set the expectation, then the client doesn't feel hoodwinked or surprised by some of the situations at hand. Then what I would say is, and sometimes, Mr. and Mrs. Client, we will need to get some additional records or information. That could involve us getting what's called an APS, which stands for attending physician statement. It comes from your doctor. It's like a checkup or a script of all your past history, depending on if the carrier needs it. So, is it okay if I come back and ask for some additional information? And when you do that, what you're doing is you're baking in a possibility that you might make a mistake, and you're asking for forgiveness in advance by saying, is it okay if I need additional information? I've had some clients who have who've had issues with not admitting to tobacco related incidents. Then we find something in the records, and then you got to go get a questionnaire done. We've had an alcohol related issue where someone, had something in their records that they didn't admit, and then the agent has to go get an alcoholic questionnaire. When I worked with financial advisors back in the day, we had a financial advisor who he had to ask his client about her lady part questions. And you know what? That can get very uncomfortable. Financial advisors don't like talking about that because they only want to talk about investments. So we are probably in the most intimate industry out there where we're asking for blood, urine, history, ever taken drugs, social security, financial information like bank accounts, and we deal with, mortality. So it is a very intimate conversation that you have with these people, which, if done right, you can create a very strong bond with them. But ways that you can help provide accurate medical records. And when you talk about that, you think about the situation of if your client had a cardiologist, would it be better to mention that on the application because they're probably going to ask for that? So those are usually for your older clients. If they've had some type of surgery due to cancer, it's always good to have the doctor's information because the worst thing is you order one APS from their doctor and then they go through, say, 20 pages of notes. And then on the last page, it says, see Dr. Smith for cardiologist checkup. Then we have to go back to you as the agent to say, hey, this client has a cardiologist. We need his name, information, and the last 5 years of records. So that'll prolong the process. So that's what we talk about, educating the client on available options and opportunities. We want to make sure that they understand that this is not a sprint, it is a marathon. But in order for us to do right by the client for a policy that should be the next 20, 30, 40 years, we got to get all the information up front. The big thing is we want to always look and choose carriers with lenient underwriting for specific conditions. I'll show you some information that we have that can help with that process. And worst case scenario, and this is why I say worst case scenario, offer graded or guaranteed issue policies or your final expense policies. This should not be the first option. It should be the absolute last option. I hate it when people lead with final expense because most of the time those end up being chargebacks. And I hate the fact that, I have some agents who have left me with a roll-up debt for chargebacks because of final expense stuff. So I'm not a fan, but if it is right for the client and they need it, then go forth and sell it. So carrier specific underwritings, guidelines. Each carrier has different unique risk tolerances, different types of strategies, different types of opportunities. A good example, I'll talk on the financial side. One of the big wins that we had when I first created Valor was an agent came to me with a case that it was husband, wife, and the husband's parents. And they applied with a carrier because they were in a limited distribution that had only four carriers. And the carrier there, when they applied for all four clients, they all got declined. Well, came over to me, said, Phil, is there anything you can do? Said, well, let me take a look and check. So we looked at a carrier that had favorable underwriting when it came to financials, and we submitted all the carriers there. We're able to place all four of them, and the agent made about $350,000. So they were older clients. So the opportunity, you have to make sure that you get the specifics from the client. And I can't stress that enough, especially with financials. We have a lot of people who are very secretive about financials, especially affluent clients. And they'll say, like, and I'll say to someone, I'll be like, hey, we need audited financials. And then they'll say, well, what do I need to tell my CPA to put on for audited financials to pass, the test, so to speak? And that's not the way it should be. We need the appropriate information. If some people are afraid to give the information, I would remind them heavily that we don't like Uncle Sam just as much as they don't like Uncle Sam. And so the idea is if you give us what we can do, then we can help you hide as much from Uncle Sam as possible. So a couple case studies or some challenges that we've overcome in the past. The first one, so again, diabetes is a big concern in the U.S. Just people are getting bigger and bigger. It is what it is. Food is delicious, present company included. However, when it comes to diabetes, there's always some concerns. So, oftentimes, when we think about diabetes, it's usually a 6.0 A1C or up that you're going to be substandard rating or standard at best with most carriers. Well, I had a client who had an 8.0 A1C, and we were still able to secure, much like you would a 6.0, a standard non-tobacco with one of our respective carriers. So there are carriers that have table shave programs, which means if you had standard and then below standard is table A, B, and C, well, they'll shave the C, B, and A and shave it up to standard. And so you'll get that opportunity. What are graded benefits? Why this and guaranteed options for people with issues? Great question, Joanna. So, real quick, so guaranteed issue or graded benefits. So, say for example's sake, you had a client who had a heart attack yesterday, right? Let's say they're 70 years old. Well, they can get a guaranteed issue policy, but it won't be in effect for 2 years. So they'll pay the premiums as if they have a death benefit, but they have to live past 2 years in order for the policy to actually be, blessed and active. Guaranteed issue are also higher priced than traditional underwritten cases. So what happens is someone pays a higher premium because the life expectancy is shortened. Typically, graded policies or guaranteed issue policies, by the time you hit year 12, you've already overpaid on the policy. So it's really meant for people who have no other option or opportunity and probably don't have a huge long life expectancy. That's why I say I don't like final expense or guaranteed issue policies They're usually 25K is the highest. Some are like 40, but they're guaranteed issue. And typically, what we find in the industry is a lot of agents will gravitate towards that because there's no underwriting. It's quote unquote quick, but the hard part is that they're overpriced. And if someone can get a policy, next thing you know, they go with someone else, get a policy, and then cancel that one. Well, these graded policies have a 2 year surrender schedule. So even a year and a half later, if the client either dies, they refund all the premiums, they don't get a benefit, and you get a chargeback, which, a lot of people hate. So if you're getting chargebacks from final expense policies while trying to get new ones, oftentimes it's done with lead-based companies. It can become a rat race. So that's why I don't really like final expense. But if you need it, you need it. So yeah, so with this case, hopefully I answer your question. But with this case here, we were able to secure a standard non-tobacco with someone who had an 8.0 A1C. And that's a huge benefit and a huge win. It saved the client probably about $10,000 a year in premium. We talk about high risk coverage. So you think about that. So things like heart attack, stroke, cancer. We had a client who had, some mild heart disease. I'm not talking heart attacks, but maybe like AFib, or a TIA, which is a long word for a seizure. Able to, with the right history and time frame, able to get them coverage. In a lot of situations, people think that's a dead end or a dead case, but as long as we get the right information, we've got 30 artists at our fingertips that can help with that opportunity. And so the big thing is that we always have to make sure that we educate the clients on underwriting factors, and preparation is key. Setting expectations for your customer is probably the most important part. When you talk about maintain strong carrier relationships, that's where someone like myself would come into play. Say, hey Phil, I got a guy, I got a gal, and we can do a couple things, and I'll show you those couple things here in a second. Review policy options regular for optimal coverage. That's the standard policy review practice. And then obviously building trust by proactively addressing any objections. So if someone is preferred plus, or you're writing a preferred plus application and then they mention that they, smoked a cigarette 6 months ago, technically you're supposed to disclose that, and that would be standard on tobacco at best. Some other carriers or some other agents might negate that information, and that could end up a misrepresentation and a canceling of the policy. The carrier does do checkups from behind and ultimately can refund the client their policies. So, what we look at is an opportunity. We always do the right thing, make sure the customer gets exactly what they want, and help them, proceed for that policy. But understanding underwriting is crucial. So I'll show you some tips and tricks here in a second, especially when it comes to health issues and managing those with proper documentation. Again, if you talk to someone about a carrier with living benefits, for example, say Corbridge, everyone always talks about the 2 year suicide clause and the 2 year clause about misrepresentation. Well, living benefits do not have a clause. So they underwrite on the back end. So if you say to someone, oh, we'll just negate this, that's fine. We had a client who had a history of seizures. They didn't put it on the application. Then 2 years later, after the or after the period of checking on the policy for misrepresentation, they filed a claim for a seizure, and they canceled the policy and sent the money back to the client because they lied. So stuff like that is important, especially when it comes to things like living benefits. Let me just see what this chat question is. Who is D provider? Are you talking about for
The
the
diabetes.
diabetic?
Yeah.
Yeah, well, there's several carriers that can do well with diabetes. Columbus has the table shave, so we were able to take that 8.0 A1C and get a standard.
Mhm.
So that was the carrier I was talking about in that example. But
Okay.
everyone's different, and I will warn people in advance, if you have a client who has a 10.0 A1C or higher, no one's going to take them. No one is going to give you traditional insurance. The best thing to do is tell them to, get on a medication that can regulate it, get it down into the six or sevens, and then we can apply to a different carrier for an offer. But someone at the tens not going to make it. Someone at the nines, we got a shot potentially, but it'll be substandard risk classes. Sixes and sevens is probably where you want to be if they have diabetes, plain and simple.
And if they had 3 years back, they had 12 around, then will it be considered?
They had 12 2 or 3
Yeah,
years ago.
2, 3 years back, but if they have taken the medication, and now it's around 8 and 7 and 8.
Yeah.
So will it be considered with hypertension?
Yeah, you have potential now. It's more regulated. Obviously, the carrier would want to see it down further. But
Hmm.
yeah, with Columbus and the table shave, it's on their IUL only up to $1 million, just so you know. But there is an opportunity.
Okay, perfect. Thank you.
So, good question. So what we'll do now is we'll kind of dive into some offerings, opportunities, whatever, through our our BGA 3 mark, because they have a lot of great information on their website about health related stuff. So I'm going to log in to 3 mark, and I'm going to click here and log in. And as you see, it opens up a lot of, context or opportunities. So if I go to underwriting resources, and I go to underwriting and impaired risk, and I click on here, and what you'll find is a bunch of hyperlinks. So let's keep this simple, okay? The first and foremost thing that I want to share with you is carrier specific underwriting guidelines. If you have a carrier that you like the most, and you want to see if your client fits in their parameters, you can do that through the underwriting guidelines. So, for example's sake, let's just go with Corebridge. Easy for me to pick out stuff, but this is their field underwriting guide. So, if I want to see like what are the requirements for lab work for X number age, this is term. So term products only. I want to do permanent, so permanent products. Say age 40, I want to do $3 million. Well, $3 million, I would get away with a paramed, PM, blood urine, motor vehicle report, and a credit check. Sometimes people will say, well, paramed is paramed with blood and urine, but paramed is actually the part two. So that's the questions like, have you hang glided? Do you scuba dive? Do you take heroin? What are your, risks and ailments? So a lot of the stuff that you'll see in the underwriting guide when it says paramed, that's just the questions in the part B. B and U is blood and urine. So let's say if I wanted $1 extra, I'd move up to 3 million and one. What does that trigger? A financial questionnaire, EIR, which is an electronic inspection report, and a credit check. So if we move further, you'll start to see other information like third party financials, TPF. Some carriers, if you did 10 million, might not ask for the third party financials, or they might not ask for situations where it doesn't say it here, but let's see, tax transcripts, so TT. So tax transcripts, that means they're going to ask for your tax your tax transcripts. So, are you really looking for that opportunity to mitigate or avoid tax transcripts? We have some clients who look poor on paper. Matter of fact, I had a client we did $40 million case for. On his tax transcripts, he was actually getting money back from the government because he looked poor on paper. But it wasn't until we got the third party financials that we saw he was worth a whole lot more. So if you want to talk financials, you might want to see how much face amount you're looking for and what are the parameters that it might, indicate from that. Other things like you look at non-med programs. So people with non-med programs, you'll have some knockouts. So like this is some of the ailments that will require APSs. So we think about it. So like lupus, lymph node disorder, multiple sclerosis, Parkinson's, pancreatic disorder. And someone has Parkinson's, you can still technically potentially get insurance. So I wouldn't completely knock it out, but it is harder. We have some carriers that will take people with HIV. So it is not out of the norm. But as you can see here, these impairments are automatically declined. You'll probably see HIV for AIG, but for other carriers, you might be able to get it. So just depending on your ailment, issue, or concern, you can figure out which way you want to go and even submit if, again, you have a lead carrier that you want to work with. If you don't care too much about that, then what I would say is there's a couple options you can do. One, you can do, if I click on this Intel tab and I click on impairment niches, however you want to say it, we have some on here. So depending on the carrier, AFib, you got some carriers who take that. Cholesterol, marijuana usage. Actually, Corbridge should be on here too. Depression, diabetes. So, like I said before, Columbus, Hancock plays well in diabetics and old clients, old rich clients, as they like to say. A good one is other tobacco. So, if someone dips, chews, snuff, Chantix, pipe, cigar, positive urinalysis, you can still get non-tobacco with these carriers as long as you admit it on the application. So there's opportunities galore with different carriers and different ailments. How can you figure out how strategic or how like in depth you need to be with these customers on some of these questions? Great question. Underwriting questionnaires will work. Okay. So here, and scroll down, you can see all different options. Now, the worst thing is you say, hey, Phil, I have a client who had cancer. Very, very, very generic. Just remember, garbage in, garbage out. What type of cancer? How is it cured? Is it cured? What stage was it? What did they do? Did they use chemo? Did they remove a prostate? What did they do? So you can use, for example, say a cancer or breast cancer questionnaire, and it has all the questions for you. Mr. and Mrs. Client, fill out all this information so I can get it back to our underwriter and see what they can do. Which leads us back to, yes, we have an underwriter on staff. We have David Royce. David Royce is the head VP of underwriting and case management. And we don't use him, consistently. We want to make sure you use people like myself to help with the process, or we can use this X-ray tool. X-ray is a fantastic tool that allows you the opportunity to see in advance what the carriers could potentially offer to your clients. So I've run a few scenarios here, and let's see, got a question. Yeah, Nacho, what's your question?
Sorry to interrupt, Phil. So, question is, what happens? The clients tell us wrong. Yeah, I do not have any cancer history or anything, and we submit the application. Everything went fine, got approved, the policy got enforced. But later on, they will find out that they have cancer or anything, any issue, right? Again,
Yep,
here the client know about it, but they did not told us, right?
yep,
And
yep,
luckily all those reports are not there in the doctor's office, so that's why the underwriter did not find it. But
yep.
later on, within the 2 years, if the insurance company find out, what happens, do the company, is the client, it gets in trouble as well as agents gets in trouble? Any ideas?
The agent doesn't really get in trouble. What happens is the letter is sent to the client. Unfortunately, there's a chargeback for the agent. But a letter gets sent to the client that says we have reason to believe, through outside parties that there was misrepresentation on the application and we're refunding your premiums. And, they'll say we wouldn't have given you the offer that you got. Or they'll say you would have been a straight up decline. And then they usually send the information to the client as to why they're recanting on what they provided. So a lot of people will think that, oh, we slipped one past the goalie, let's just get past the 2 year mark. Well, throughout that 2 years, they have internal investigation people checking to make sure that everything is kosher with the policies. And I saw one when I first created Valor, and then I just had one recently that got refunded as well. So it can happen. And the agent doesn't really get in trouble per se, because again, the idea is that we're doing the best interest for the client. The client signs off on it. We assume that we asked all the right questions. So really, the onus goes back on the client at that point. So I haven't seen any like indictments or charges against agents for misrepresentation. The carrier might drop the contract, but they won't like press charges.
Got it, got it. So does all the every like how does it the 2 year period happen? Like does the carrier check in the background every time like for all the clients? Like how do that red flag appears to the carriers?
Yeah, I mean, they'll have triggers like so, and I don't know the full example. I just know it's like a hit squad, if you will, where you'll have a few people at the organization. They'll probably be given a list of clients to go research and just check background stuff, unbeknownst to the client, unbeknownst to the agent. And so it can happen. I don't have the actual full-blown parameters, but I know I've seen it when I was an RVP. I've had it happen a couple times as an agent, not specifically to me, but in situations. So it's hard to say like exactly what would trigger it, but I think it's fear of that nebulousness. I'll use that word. That it could be out there that usually will help prevent people from doing it again, kind of thing. So, but yeah, I mean, we can't control clients from that standpoint. We can only control what we can control, and then at that point, we just have to kind of, you know, hope all is good. The best way to put it.
Phil, I have one question.
Yeah,
So once they do pass their 2 year of incontestability, then there's nothing they can do at that point, right?
hypothetically, yeah. I mean, at that point, it's pretty much so. Like, say for example's sake, you know. You're a male and someone accidentally put female and you're paying female prices the whole time, and then you pass away, they could see that there was a correction there and they might take it off the death benefit, what the premiums would be, or you might have to pay the back premiums and then they unleash the death benefit once it's all paid up. Stupid stuff like that. But, if you're talking about like a heroin user who didn't admit heroin and then the 2 year incontestability is over and then 2 years later they die of an OD, there's nothing the carrier will do about it.
Okay, all right. Thank
Yeah,
you.
no problem. I hope I'm not giving secrets away where people are like, oh, now I know exactly what to do on apps. Just kidding.
Yeah.
So,
Hi, Phil.
but
I have a question.
yeah, what's up?
Yeah, so what about the beneficiary? Suppose if a contingent beneficiary who is not in like in USA and they are in in their own hometown,
Yeah.
so how the funds will be transferred to them? And so of course they do not have a social security, I mean SS number and all these things because they are not living in Canada, I mean USA. So how this will work? Please guide.
Yeah, that's actually no problem. So when I was at Corbridge, I helped an agent who had a client whose beneficiary lived in Jamaica. Others lived in India, and that was no problem as well. And during COVID times. As some of you on this call knew, when I was an RVP, I helped one client who passed away in India. They were taking care of their 70-year-old parents. Parents died of co or stayed alive. He nursed them back to health, and then the 43-year-old male died of COVID. And so what happened was we had to strike a check and send it, foreign, and it works. It pays just like if they were here. The only difference is it's going to go in check form and it's going to go in U.S. currency. So it's not us to change it to domestic currency, but
Mhm.
yeah, we'll pay death claims all across the world.
Okay, and suppose some of the family members are here in
Mhm.
USA but do not have a, I would say, they are on different visas.
Yeah.
So, and of course, I mean, so it will be transferred to them as well.
Yep.
Okay.
Yep.
Okay.
Yeah. Yeah, that's a great question. Again, the whole objective is to, provide a promise. And the big thing that people always get fearful of is like, oh, my parents are in X country, so I'm just going to put my best friend as the Benny. And then the carrier's like, there's no strategic loss to this friend to get the money. So what's the deal? And then they're like, oh, well, it's actually for my parents, but they live in X country. You can put parents and you can say there is no social. Like there's a spot to check to say no social. And you can put the address of where they live and it's totally fine. So that's not an issue at all.
Thank you.
No
Yeah.
problem.
But Phil, isn't it like in a continuation in that question, isn't it the beneficiary name needs to be matched, right? Say,
Yeah,
for instance, the application we added some Sam, but that person is living in outside, and if we wanted to, once in the claim form, we cannot put a different person's name who's living in US, correct?
correct.
Has to
Yeah,
match, yeah,
has to match.
yeah.
Yep. So whoever the beneficiaries are should be, and actually, so like Netra, for example's sake, client dies, you fill out the death claim, they're still going to send the beneficiary paperwork to the beneficiary on file. So it doesn't, it almost doesn't matter who you put because it's still going to go to the beneficiary. So
Right,
it's
but
just,
in the same question, like the beneficiary, if they're living outside of US, they will receive the check in the US dollar, then it will be difficult for them to deposit, I guess. That's a big question.
yeah, I mean, what you can typically do is I would go to a bank that is worldwide, Wells Fargo, HSBC,
I
someone
see.
like that. Yeah. So I mean, if I if I was a bank and you were coming to me saying I'm having a hard time depositing $1 million check,
Mhm.
I will surely find a way for you to do that.
Sure, sure. And also on the check, the name will be listed, and obviously you cannot deposit into somebody else's account as well who has US bank account. So that's another
Correct.
problem.
Yep. Yep, you are correct. So everything has to match. So that should help protect the beneficiaries to get their rightful money, so to speak.
Well, I have a question.
Yeah,
Suppose a client is like have $1 million term insurance and it's of around 20 to 30 years, and
okay.
supposedly he moves back to India,
Yeah.
and still he's continuing that policy. So how it works?
Same way a normal policy would work. If it's in force and they die, that's
Mhm.
the beneficiary gets the death benefit.
Okay.
Yep.
And that's not a problem if he's not living in US.
Nope. Because at the time when he took the insurance, the underwriters are assessing the risk as for today for the 30 years in the future. But you
Mhm.
will know that one of the questions is, does the client have any intention of leaving in the next 2 years?
Mhm.
And what I always tell people is that if you don't have a tangible ticket in hand, then I would say no. Some people will say, well, yeah, I plan on visiting Afghanistan, for some reason. And you're like, come on, it's like if there's no ticket, but they're going to decline it because of the travel, I just got a case today. It was postponed because the client's going to be out of the US for over 30 days. So it happens. But if at the time there was no anticipation or expectation to move back to India, then as long as they're paying in US currency, that policy is active just as if they still lived in the US.
Okay, perfect. Thank you.
No, great questions.
So,
So,
Phil, and
yeah,
relates to the same question, like if the client leaves to, leaves the US and, goes back to their home country, wherever it is,
yep.
within that 2-year contestable period,
Yeah.
and something happens, well, how would that be taken care?
Well, basically, contestability means that as long as everything on the application is kosher, there's no funny business, then they're going to pay the claim. So in the 2-year contestability, I'll give you a good example. I had a client who she was a little older. She bought a policy back when I was at MetLife, and she was a table E as in Edward. Um, 2 weeks later, she died, and the reason why she died was a car accident. So they still went through everything fine tooth comb, ended up paying the claim because it everything checked out. So once again, if someone has that anticipation that they're going to leave in the next 2 years, then that could be considered misrepresentation. But if they had no anticipation to leave, then it's not misrepresentation and they should pay the claim. So those are obviously tricky and more case by case basis, but more often than not, I haven't seen an issue with it. So we've paid death claims. The insurance carriers, have paid death claims to people foreign and domestic, no problem. So I wouldn't see that to be an issue.
Got it. I have another question, Phil.
Yeah, what's up?
So these days, I'm coming across a lot of people who claim like they are like social drinkers or social smokers.
Uh-huh.
Uh, like, when I ask like how many drinks or how many smokes do they have in a week, or if I'm going through the application, right? They would ask the same thing.
Yep.
And the answer is like maybe 1 or 2 beers in a month, or not more than four in a month, kind of thing.
Yeah.
So when putting it in an application, how would you uh, inform client, like, what should they put it in the application?
Yeah, I mean, the application actually, the spot where you would ask those questions, so you can actually put that into the spot. So we'll say how many drinks per day, how many times per week, and you can actually specify in there. Cigarettes is a different animal because if it is actual cigarettes, then they take that very, very seriously because of the addictive habit. However, cigars, you can have it's either 8 or 12 celebratory cigars with Corbridge. As long as you have a negative urinalysis, you can admit to the cigar usage without, you know, hindering your offer. If there is a positive nicotine hit, though, you're gonna get a tobacco rating. Uh, so that's with Corbridge. Now, if you had a cigar usage with, say, for example's sake, Lincoln would give you non-tobacco rates even with a positive urinalysis as long as you admitted it. But that's the key factor. So cigarettes and vaping is always going to give you a tobacco rating. Cigars, dip, chew, snuff, pipes. That's where you have some carriers that'll give you, I guess you would call it the gray area. So that's the difference. And so it just depends. You got to ask the question of the client. If they've had like one cigarette in, 5 years, I wouldn't worry too much about it. The hard part is When they tell you it's one cigarette in the last 5 years and then they get a positive nicotine hit, then we got a problem. So that's the big thing is, rumor has it clients lie, and it happens a lot. So you just got to take it in stride, really, from that standpoint. But just be as honest as you can. If the client only has like one drink a week, then I'd probably just say they don't drink because it's really not worth putting down and answering all the questions for one drink a week. If they drink one time a night, then I would probably disclose that.
Got it. Thank you.
No problem. So, yeah, so kind of going back here with the underwriting, and let's say you have basic information. Okay. I'll click on Phil Resch because I think I used this before. Yeah, so if I wanted to, for example's sake, start filling out the questionnaire, so Phil Resch, date of birth, term product, 20 years, $1 million, Tennessee. Then I hit next section, and you'll start to see, you can fill out information. So height, weight, and does chest exceed waist, stuff like that. You'll start to see some information coming up and pricing. Do not take this pricing as gospel. I'm just telling you in advance. Uh, I hit next section here. Ever use tobacco? Yes, no, yes, no. You'll see the questions here. And if I change, and then hit next section, it'll recalculate and recalibrate these. If you have cancer, heart disease, stroke, or diabetes, let's say yes. And then diagnose the cancer, no. Heart disease, no. Diabetes, yes. When diagnosed, let's say 40. And father died diabetes, no. Ever had a stroke, no. Nothing, nothing, nothing. So like this is your family history. So let's just say no, keep it real simple. Then we talk about blood pressure. If you don't have it, just move on. Cholesterol, if you don't have it, just move on. Driver violations, more than likely you don't have that. Aviation, no and no. All of that will analyze the information that you have. So let's say, for example's sake, you have diabetes, type 2 diabetes. Well, then the next section, they're going to ask more questions. So it'll all be built into this program. When did they get diagnosed? What was the last A1C? Any complications? Currently treated? What's the insulin unit amounts? And stuff like that will dictate what the pricing is over here. Now, let's say you go through the whole process and you have additional stuff, for example's sake, that isn't in these medical questions. Well, you can add additional information here and put it in. You have to be very, very specific. So, if, for example's sake, it was information here that's not showing up here, like cancer, you have prostate cancer, that's it. And then the rest of it, there's no other cancer. You can fill out all the information from this form into this sheet. Then, once you're done, you can go down to messaging. I scroll up, and Karen is our contact. You just hit done, and it'll send her a synopsis of everything, and she'll shoot it out to all the carriers. And here's the X-ray ID for Phil Resch, 17450. So what she'll do is she'll send back an Excel sheet with all the carriers and the different offers that they're going to give. So, for example's sake, I will show you let's go to dashboard. And this client, Ms. Baker, she got 15 received quote unquote offers. We'll hit view case. And based on what was filled in X-ray, you'll see a table 4 with Prue, table 6 with Lincoln, 4 with Hancock, banner 6. And then what we do is we go back into WinFlex, term generator, whatever we're using, modify and give the different risk classes for the different carriers. You'll see some did not even offer, but now you have the ability to show a client, tentatively speaking, what the pricing is based on the ailments or issues that they have. This is what you call setting the right expectation versus submitting a preferred plus, finding out 6 weeks later that they're not going to get anything because the offer is too high. So we can do the due diligence up front and get all the information that you can, especially if they have something like cancer, heart attack, stroke, and there's all these different options here. So like something like heart attack, they'll call it usually hypertension questionnaire. I don't think they have a heart, they have heart failure, heart block, heart valve disorder. So, oh, heart attack, myocardial infarction. I always like saying that. So that would be your heart attack questionnaire. But you have a bunch of different options here that you can utilize for different reasons. If not, I believe there's a generic underwriting questionnaires. Let's see. Yeah. Oh, that's all of them. Never mind. So use this where you can. This should help you in regards to setting the expectations with underwriting, kind of going back full circle to, we talk about here. You guys have already asked some good questions, but just kind of showing the strength of what we have available through partnership. You have a whole underwriting resources, those who play in the foreign national space. We have a whole playbook around foreign nationals and different ways that they can be utilized with different carriers. So a lot of great information here. The last thing I'll show you before I open up for questions, because I know we're kind of over, but IntelliSheets, this is a great example of if you want to see who has automated underwriting, non-med, like I can click here for accelerated underwriting, click all the carriers, and open an Excel sheet so I can see based on carrier, well, Anaco's out, but aside from Anaco, product, age, face amounts, risk classes available with all the carriers in the industry, or all the major ones, I should say. No Louisiana Life, just joking. Um, so a lot of cool things here, a lot of cool opportunity.
I
If
thought it
you,
was for me.
I know, I was just busting your choice. So couldn't help myself. So yeah, so we have a lot of cool stuff here that is available for you. And really the idea is just to help you guys get to where you need to be. My mantra, as always, is take care of your community will take care of you. And if this is something, if you guys are just visiting for today or watching on the tube on a replay and you're not part of Valor yet, feel free to give me a holler. This is one of my cell phone numbers. This is actually my marketing cell number. So you can call that, text it. You can email me at phil@valorfs.com. But we're here to support you any way that we can. And again, if you're not signed up yet, definitely need to get signed up for the great collaboration. It is in the chat box, tgcconference.com. And let's see if we have a question here. Great info. Yeah, that's the ones I like. So I know we're in quote unquote overtime, but does anyone have any additional questions? And maybe we'll take one more and then we'll call it a day. Yeah, Joanna.
Yeah, so yesterday you were showing a sheet that there was some kind of meetings in different places.
Yeah.
What is that about?
So that is what this is so if we go to the regular tgcconference.com site and we scroll down, we had one today where basically what I do is I talk about one carrier, one product to give people something they may not have already. Then we talk about a sales idea. So we talked about estate planning today and the opportunities that you can get by just talking about estate planning with your clients, customers, and how you can leverage certain conversations to get sales. So I have partners all across the country. So as you see here, we did one in Orlando, just finished one in Charlotte. Next week, I'm heading out to Sacramento, Anaheim, and just not even flying home, going right to Dallas from there, then jumping on to go home for a couple days, and then heading out. Well, I'll be home for Nashville, so that'll be cool. And then jumping up to Pennsylvania, up in the Pittsburgh area, before everything culminates to the big event. And so the big event again is designed for sales ideas, carriers, and some technology and stuff that can enhance your practice. So all of that being said is they have little different reasons for each. These are micro collaboration events that we're doing across the country, but all of it is to kind of tie in and tell people about the value of what we have for the big event. And for a lot of people who are in here today, we're part of network marketing organizations. They would usually charge you $300-400, not feed you, and you still have to pay for a room and transportation, all that stuff. So we're charging only $25 for the big event, day and a half. I promise I won't talk about mindset at all, um, or recruiting, but it's meant to help people grow. And so the event is we also give you people food. So on the 25th, excuse me, on the 3rd, we're giving people breakfast or lunch, and then on the 4th, we give people breakfast. And those coming in from out of town, we'll even have a cocktail reception the night of the 2nd. So just trying to make it advantageous for people to come. I always like to say collaboration is for people at the top. People compete at the bottom, people collaborate at the top. So we're just looking for people who want to collaborate. And if you want to dance more with Valor, you can. If you don't, then there's no harm, no foul. But you'll hear some sales ideas and opportunities to help you grow. That's the big thing. Yeah, go ahead, Joanna.
Yeah, and like for example, can I go to that which is in Anaheim?
Yeah, absolutely.
So
So
how do I go there?
yeah, tgcconference.com, and all you have to do is registration,
Oh,
and right there, register for Costa Mesa. So it's going to be at a Maggiano's. Says I love Italian food. My wife's Italian but doesn't cook Italian, and all you do is register right there. So April 3rd, there's a location, and it's mighty delicious food. I had great food today at the Maggiano's. All right, see you, Yasmin. Thanks for coming. So does that help, Joanna?
perfectly. Thank you.
No problem. So great stuff. Great opportunity. Want to say thank you guys for sticking on from overtime. Hope you have a great rest of your day. Look forward to seeing you guys in the future, wherever you may be. And we'll just keep rocking and rolling with these presentations. So thank you guys. Thank you, Netra. Thank you, everybody. We'll see
Thank you,
you
sir.
either. No problem. Thank you. We'll see you next week, Wednesday, 8 o'clock Central, uh, Thursday, and we'll keep moving forward. So take care, guys. I'll see you.